Good morning. This is Larry McMillan with a stock market update on Monday, March the 7th. So the overall picture is still negative. The S&P chart is still in a downtrend, and therefore we recommend holding a core bearish position. S&P has probed down to the 4100, 4200 area a couple of times. So 41, 42, that's a support area. Above here, we've got resistance in the 4400 to 4450 area where we have the downtrend line that's in force right now, plus the 200-day moving average and the 20-day moving average. We would not consider this downtrend over, though, until S&P broke above 4600. If that were the case, then we'd have to alter our attitude. The equity-only put-call ratios remain on buy signals technically. And by technically, I mean that, yes, they gave buy signals a little over a week ago, but in the last few days, they've started to rise again. So far, this rise has not canceled out those buy signals, but it's still not very confirmatory of a true strong buy signal. So I prefer to see these things begin to drop, make new relative lows, and that would confirm the buy signal. So right now, we're not acting on that particular buy signal. Breadth has been negative, so the breadth oscillators have fallen back into sell signals, but they are in oversold territory, so they will keep trying to generate these buy signals along the way. So far, they haven't been too successful. New highs versus new lows. Again, we're seeing new lows dominating. I believe we had one day in which new highs were outnumbered new lows, but that was only on the New York Stock Exchange. And so right now this indicator also remains negative but oversold. So that brings us to the volatility complex. On the positive side, there's a VIX spike peak buy signal in place right now. But on the more negative side, VIX is trending higher, and it's above its 200-day moving average, and the 20-day moving average is also above the 200-day. So that makes for a negative trend in VIX. And perhaps even worse, the construct of volatility derivatives is negative, meaning that the term structure of the VIX futures slopes downwards, that the front month volatility future March is outnumbering, is higher than the second month, April. And that March is still the front month until the 15th of March. And also in the CBOE volatility indices, we're seeing them also slope downwards to a certain extent. So all of that adds up to one big negative. We've got a downtrend in SPX, an uptrend in VIX, and those two things alone acting in concert is what's convincing us to remain with a core bearish position. We would trade some of these oversold buy signals around it when they are confirmed, but they keep attempting to generate buy signals but quickly fall back and cancel those out. Another thing that I've just noticed in general, the bulls keep seeming to expect that once this Ukraine situation falls out of the headlines, that the bull market will resume. I'm not convinced of that at all. So we are remaining, as I said, in a core bearish position. I invite you to visit our website, take a look at our newsletters where we cover all of our indicators daily. And meanwhile, have a great week trading.